Good afternoon, everyone. Welcome to the Daily Recap. I am Evan Lazarus. I'm the CEO of T3 Live. And it's been a slow week, I guess, after the wild trading that we've seen over the last couple of weeks. The market's starting to slow down a little bit. We are still, continuing to push higher day by day, little by little, hour by hour. But there's certainly not a lot of momentum ever since we pierced new highs. And I have diagrammed here in the SPYs. Again, this is a bit of a broadening pattern that has been highlighted by a few of the T3 Live, some of the members of the T3 Live community. Most notable, this is a Rob Smith special, broadening formation, as well as Jeff Cooper. Jeff joins us from our acquisition of Minionville Products. Actually, Jeff's having a webinar next Wednesday, so make sure you keep your eye out for the link to register to that. But this is a tough pattern to trade in a sense that it makes new highs and then turns down, makes new lows and then turns back up. And again, this is all sort of patterns are really in the eye of the beholder, in my opinion, in the sense that it's usually after the fact you noticed. But I would say, as far as the market goes, I would be watching, this area up here, possibly as early as, next week. This is the spider chart. I would say somewhere in that 204 to 206 area. You might want to watch price action. Obviously, we've seen, a huge move with really just one day of a pullback, which is rather unbelievable given the size of this move and the short amount of time. Like I said, one day of a pullback where you've seen actually a prior day's low get taken out. But rather than, kind of rehash what I've already said, and I spoke about some of this earlier in the morning call, we still need to respect what's happening here. Definitely a quiet day. Most of my colleagues were probably had it packed in by 11:30. I think the trade of the day probably would have to go to the gold. And I talked this morning about GLD. I said, the inside day yesterday could be some sort of catalyst for some sort of pop. And that's exactly what happened today. Gold, kind of traded higher the entire day. And if you look at some of the gold stocks, here's GOLD, here's ABX. Some of these gold stocks saw some nice, a nice surge in price today. So could this be a short-term bottom in gold? I think so. And you might want to watch some of those names in the days ahead for maybe some higher prices, as that whole industry, that whole commodity has basically been taken to the woodshed. So there could be some buying ops or some reflex bounces that go on over the next couple of days there. We'll certainly keep our eyes out. Outside of that, like I said, very muted session in terms of some of the stuff I was keeping an eye on today. Apple, Apple I talked about this morning. Not a ton of momentum on this break higher. It looks like maybe we'll get another resumption of an uptrend into next week. Traded above yesterday's highs. We're at relatively tight range. We saw as high as 109.30, as low as 108.70. But like I said, most of the strong ones, continue to hold their gains. Most of the weak ones, continue to look weak. On the other side of the equation, I talked this morning about oil. Here's USO. Oil, breaking down, still looks very bearish to me overall. Just kind of consolidating here on the lows. As you look around some of those oil and energy names, and again, not to rehash, but Conoco, it's had a bit of a bounce back, but again, nothing I would call substantial. Apache, Baker Hughes, the list goes on and on there, and you can kind of spend some time over the weekend and go through some of those energy names and find ones that could present opportunity. I highlighted one this morning. I'm not sure if anybody picked up on it. And this was a recent chart from Off the Charts. Walter Energy, breaking out of this base. Again, this is a $2 stock. Well, now a $3 stock, but a stock that, here's a weekly. At one point, just a few years ago, was 150 $140, $150 a share. Now just a measly $2. And getting a bounce here above that 255 was our entry price for those off the chart subscribers. Nice little surge here in price. My target was 380. It looks like we may have the potential of seeing that in the next coming days. I wouldn't go chasing a $3 stock here, but the reason I bring this up is because you really got to do your homework in this tape, because it's not quite the same tape that I think it was when we were making new highs, a few weeks and a few months ago. Like I said, there is some leadership out there. The social media names clearly, have been beaten up via earnings. Here's Facebook, and we haven't really seen them bounce back. Twitter, again, sitting here on the lows after gapping down post earnings. Now, LinkedIn, again, the one that kind of got that push. We saw those 3-up days, and then some pretty big selling. Looking for this one to break 221 for an entry there as a short trade for off the charts. But it really is it's a very stock selective market right now. You can't just be net long. You can't be net short. You have to have a very tactical strategic approach to trading. Those that are using our virtual trading floor, those that are using some of our alert services, I think are probably clued in on money flow, whether it be an inflow of money into trending stocks like an Apple, or money outflow, or shorting stocks that are clearly going lower. Here's DDD, another one I highlighted. So it's a case of the haves and the have-nots. And I think that this market, less is more, and I'm not trying to speak in sort of these generic metaphors. I really think that if you're going to trade a tape that is it is directional in a sense where you look at the S&Ps and you say, well, it's clearly going up, but like I said, when you look under the hood, it is not every chart has the same look and feel. And the ones that presented leadership before. Here's Google. Certainly don't have that same that same MO as they did as much as a couple weeks or a couple months ago. So I think it's a very different market. The composure is different, and we are making new highs. I think that there's a lot of people out there that are looking at these highs in the market and kind of approaching it with a level of skepticism because it just doesn't feel quite the same as it did before. And look, that's the reality of it is we make our money as traders, investors, through the movement of price. So that's what we have to respect. And so long as price continues to, sit at new highs and do what it's doing, you have to respect it. If and when something changes, we'll see it. We'll be the first ones, on top of it. But for now, pick and choose your battles wisely, and make sure you're trading with a tactical and strategic plan. As always, do your homework over the weekend. Like I said, Jeff Cooper, a very welcomed addition to the T3 Live community and family of experts. I next Wednesday, the 12th, I believe he's doing a webinar, and I'm sure you'll see some more information on that in the next week. As always, everybody, have a nice weekend. To all the veterans out there, we love what you did for the country, what you do for the country, and have a nice one, everybody. Take care.